Hi, everybody. I'm Pierre Bouvard, Chief Insights Officer here at the Audioactive Group at Cumulus Media in Westwood One. And today we're asking, can audio, consumers of podcasts and AM/FM radio, be a powerful marketing platform for financial services brands? Well, the answer to that question is a resounding yes, according to 7 financial services case studies conducted on a series of radio and podcast campaign over the last 8 years. So first, let's take a look at the current media plans in the financial services category according to Kantar and Vivix. If you take a look at the top 15 spenders, the vast majority of the media investment is going to linear TV at about 49%, digital about 44%, and very little audio, only an average about 5% of media investment going to radio. This is despite the fact that the Bible of media planners, Emery Simmons, says audio is an ideal platform for financial services brands. In fact, Emery Simmons found that AM/FM radio listeners are more likely than linear TV viewers to be premium clients for financial services brands. MRI examined responses to the question is, I'll pay any price for good financial advice. And they indexed positive responses to this statement among heavy TV viewers who are 5% below the US average, heavy radio listeners that are 6% above the US average, and heavy podcast listeners that are also above average. So clearly, it is the audio consumers that are more willing to pay for good financial advice. And where in the world of podcasting can you find these folks that are likely to be in market in the next 12 months for a wide variety of financial services and products? And so here are all of the podcast genres. And the interesting finding here is, don't build your financial services podcast plan like a pinprick, meaning like, oh, I'll find a couple small podcasts that talk about financial advice, and then I'm all done with podcasting. That is marketing malpractice. Look at all of these podcast genres. Look at what huge proportions of these podcast listeners across all of these genres that say they are in market in the next 12 months for financial services and products. I mean, it's literally everything from true crime, religion, comedy, history, sports. Basically, each and every podcast genre has a huge proportion of folks that are in market for the financial services category. And what about radio? Again, we see the same story. Huge proportions of AM/FM radio programming formats that say they're in market for financial products and services over the next year. It's not just news talk. It's not just news and spoken word. It's sports, it's classical, it's adult standards. It's literally all of the formats. So let's take a look at 7 financial services case studies conducted by the Audioactive Group here at Cumulus Media in Westwood One over the last 8 years. Each of these studies conducted for different national financial services marketers. The first case study examines an established financial brand, a very well-known brand, and they wanted to look at consumers with heavy investable assets. Those are folks that have over $500,000 of investable assets. And the first question was, does radio have people that are in market for a new financial services company or an additional financial services company in the next year? And how does that compare to TV viewers, where this brand spends most of their money? Well, amazingly, heavy radio listeners have 3 times as many people that say they are in market for a new or additional financial services company in the next 12 months. So from a TV perspective, what it means is 9 out of 10 people that are being advertised to in linear TV are not in market for a new or additional company in the next 12 months. Radio, on the other hand, has 1 out of 3 consumers, 3 times as many as TV, that are in market in the coming year. Case study number 2 was a very famous company that was rolling out a new service offering, and they wanted to examine the impact of the radio campaign over a 3-month period. And on the right-hand side, you can see the radio campaign drove significant lifts in awareness, brand imagery, consideration, and association to the brand slogan. Case study number 3, another major financial services brand had a new offering. A 6-month radio campaign was implemented, and we conducted a pre and post brand effects study using Maru Matchbox. In this particular study, they wanted to examine consumers with $1 million or more investable assets, so a very high-end target. And you can see on the right-hand side, basically around 20% increase in awareness, product awareness, brand favorability consideration, message association, and ad recall. Case study number 4 was an online financial services platform. They examined a series of attributes to examine the level of passion and engagement consumers had in being in the financial category and being an investor. The gray is represented by TV, the blue is represented by radio. I won't take you through all 10 attributes, but suffice to say, radio crushes TV in each one of these 10 attributes of financial services engagement. I'll just show you 2. Investing in the future is very important to me, investing for the future. Radio was 79% agree, TV only 69% agree. And then the statement, I enjoy learning about financial products and services from others. Radio, 56%, only 45% of TV. Case study number 5, a digital brand was targeting a kind of consumers they call thrivers. And thrivers were defined as consumers that are not overwhelmed by financial burdens. They like to take risks when investing for a high return. They agreed that investing for the future is important, and they looked at their work as a career and not a job. And radio really had a significant presence of this financial services segment, plus 44% versus the total market. Now, most recently, a financial services brand utilized a wide array of Westwood One sports platforms: NCAA college football, professional golf, the NFL, and Westwood One sports updates. The campaign was measured last fall 24 with a Maru Matchbox brand study. Now, to set the stage, the brand wanted to understand the ownership and existing usage across a series of 7 different asset classes. What proportion of consumers own stocks, mutual funds, exchange traded funds, bonds, private equity funds, et cetera, et cetera. So the total market is on the right-hand side. Heavy TV viewers are next to it. You can see heavy TV viewers are basically in this particular study at the national average, but look at the heavy podcast listeners. Look at the heavy radio listeners. They are way above TV in terms of ownership across these 7 investment vehicles. And heavy radio and heavy podcast listeners are much more likely than the national average to actually own these investment vehicles. So heavy audio consumers are more in the financial services category than America overall, and much more likely than heavy TV viewers. Now, how likely are consumers to invest in 5 of the biggest financial services companies in America? The Fidelities, the Vanguards, the Charles Schwab, TD Ameritrade, the T. Rowe Price, the BlackRock iShares. Well, all the way on the right-hand side, you can see the proportion of all Americans that would consider investing in these major brands. Then you see the heavy TV viewers, and look, they are below the national average for every single one of these brands. What is shocking is that all of these brands are massive spenders on linear TV. So despite the hammering, despite the deluge of TV advertising, there is less interest and less consideration in investing in these major advertisers. Now, these brands are light or barely spend anything on heavy audio, but look at the existing interest in Fidelity, in Vanguard, in all of these companies among the heavy audio consumers. So audio has investors that are actually investing and they're interested in the big brands. What they're lacking is marketing investment. So this particular brand did have this AM/FM campaign that had a nice array of sports investment through the fall. And then we examined kind of the classic brand equity attributes: familiarity, ad recall, favorability, consideration, purchase intent, or do they currently use. Total US is all the way on the right, heavy TV next to it, and then you have the heavy audio consumers. It is a slam dunk. Audio blew the doors out. Look at the strength up and down the purchase funnel for this particular advertised brand. And then when we look across the sports platforms of Westwood One, the PGA, NCAA football, the Westwood One sports updates, the NFL, across the entire purchase funnel for this particular brand, among listeners across these sports platforms, significantly stronger brand equity versus the people that were not exposed to the campaign that you see all the way across the bottom. So sports content on radio really works for financial services. Another aspect of the study was an examination of B2B targets, business to business targets, financial professionals. So everything we've seen so far is about the consumer, but now let's look at people that actually work in finance. These would be people that are financial plan sponsors or consultants or financial advisors. Maru Matchbox examined agreement to a whole series of these attributes about the specific brands in the marketplace. And we examined a response to these attributes among those that were exposed to the campaign, among these B2B segments, and those that were not exposed. And the radio campaign blew the doors out. Among plan sponsors and consultants, the average across the 10 attributes was an increase of 42%. Among financial advisors, the radio campaign really worked, increasing performance across the 10 attributes by 2.5x. Case study number 7, a marketer using radio for the first time. And the campaign from fall of 24 measured by the Harris Poll brand tracker. A bit of context in terms of the media plan from Vivix Kantar. This is a marketer who historically spends mostly on linear TV, about 61% of their budget, 24% across mobile digital, and then only about 5% across audio, 2% podcast, 3% radio. So primarily a TV advertiser. So what does Harris Poll brand tracker say this fall about awareness, familiarity, consideration, and brand equity among consumers overall, the heavy TV viewers, podcast listeners, and NFL radio listeners from Westwood One? Well, you do see that the heavy TV spending did help this brand with a higher than average awareness of 66%. But look at their familiarity and the consideration and the equity. Not that much bigger than the national average, despite the massive commitment to linear TV. Then look at podcast listeners. There's very little spending going on in podcasts, but much higher familiarity, much higher consideration, much higher brand equity. Same with radio. What's the deal here? The radio and the podcast audience are simply more engaged with the financial services category. They're more likely to invest. They're more likely to be making a commitment for a new or an existing financial services company, way more than linear TV, where the vast majority of the audience, 80%, is over the age of 50, and many are already long retired. So the key findings across these 7 studies over 8 years. Compared to TV viewers, audio listeners are far more likely to actually own investment assets, to be in the market for financial services and be interested in the category. And despite massive spending across this category by financial services marketers, surprisingly, TV viewers exhibit low brand equity for these brands that are spending so heavily on TV. There is just weak interest in the category, most likely due to the older skew of the audience. And as we saw across these 7 case studies, in each case, the audio campaign drove significant brand equity and drove significant purchase intent. The Audio Active Group here at Cumulus Media in Westwood One is a full-service brand advisory, offering media planning recommendations, creative best practices, and lots of measurement. We can bring in third-party leaders in marketing effectiveness to examine brand lift, sales effect, search and site attribution, as well as creative effectiveness. And each and every week, we publish a new Audio Insider case study. You can find it on our blog at cumulusmedia.com or westwood1.com. And when you're there, sign up to get our weekly email of audio case studies right from the website. Thanks so much for the opportunity to take you through 7 case studies from the financial services categories conducted over the last 8 years. Thanks so much.